What's up, YouTube? Today, we've got a few things that we could talk about, one of which is highlighting execution and how I gauge the DOM to gain access into the market on specific ideas. We'll start in the high time frame, go over some key nuances that I noticed, beginning from prior day's auction, leading into Globex, and then the current auction. Let's ask ourselves, where has price gone? Where did it come from? Where is it currently not interested in auctioning, and where might that take us? We can see here that as price finally broke out of this range, it finally started to build volume. It found interest as it was moving lower. But what actually happened? All of this volume, which does have sell-side inventory, got left behind one at a time. And the biggest node is very key. This volume was responsible for holding price lower when it finally broke the range. And in the end, they got left behind, price moves back into the range and has a low volume area. What's interesting about this move up is as price fell back into the range, they didn't really build much volume here. So as selling picked up and showed interest in pushing price lower, as soon as price got back into the range, the sell side left. Price ran through with little resistance and actually started to build higher, firmly back into the range. If you refer to the 30-day rolling profile, you can see that this is when it starts and the entire range spans about 500 points. This means there's quite a big runway for long targets. Going down to the 5-day profile, we can see that there is a node here. And if they were to auction this again and leave this node behind, this is increased strength on the buy side versus the sell side. And as price rips up yet again, there's a key difference here. Low volume. All of a sudden, in a range where both sides were happy to auction, it seems that the sellers no longer want to sell this range. They are not willing to do business here anymore. The session ends up closing towards the highs and leads into Globex, where the market balances and consolidates, accepting this new range. So where has price gone? It's gone downwards outside of the range, built some volume, showed sell-side interest. The market showed its hand and found the answer. There's still too much buy interest that outweighs sell interest. And as soon as the market came back into the range, you can see a drastic shift in how volume builds and how the auction forms versus every prior instance. The second question, where did it come from? Below. And where is it not currently interested in auctioning? Back lower. Now there's a specific key factor to notice. Within this range of low volume, there's also a taper in the Globex range, moving back downsides into this imbalance. This is a spot where the sell side stepped off. There was no interest in getting in front of the buyers. And it seems that that's still the case. As price transacts lower, they struggle to find any willing sellers. Now this box coincides with this profile, and the 5-day rolling. This is a low volume spot leading directly to the next node. And it seems for now that the sell side is not interested in doing business in this range. The same range that they've been very happy to sell for a long time now. After seeing what happened down here, all of a sudden, lack of interest to sell in the middle of this range. So ultimately, the final question is, where might that take us? Back upside at the top of this range. Using the 30-day rolling profile, you can see that this is right before it heads into low volume, which is where price needs to find acceptance if it were to transact higher. So with all of these things in mind, let's go down to the intraday action. Important things to note. This box is the same one we just drew, where the market doesn't seem as interested in selling anymore. So we've got 2 attempts leading to a break of this swing and ultimately a break of this one. This is a very key piece of activity in the market because they did pull this back as they reached the open and the swing high, but ultimately the pullback fails. It seems the dynamic has changed and the buyers are willing to step in higher, filling all of the sell interest. At this point, I'm thinking that this node built before the move down should be held by the sell side. And if it's not, we're likely going to just move through this entire range, through the IB high, possibly to the overnight high, and into this next zone. So to start the whole thing off, I'm actually looking for offers. I'm looking for this node to hold, for price to move lower, fail to bid through the zone again, and to work its way down. As we know, because this was live on stream, I ended up taking a long position instead after they failed to break this thing lower through the low volume area. The bid comes in with urgency and it starts to very clearly look like the market is looking to drive higher and not lower. So let's go ahead and replay this. We'll go 1x speed. So this is where price starts to pull back, moving lower. I'm waiting to see the activity. I'm gauging it around the open. We do see continuation. Sell side still pressing on the pull stack. Now the bid starts coming in on the pull stack and reloading. It gets a nice push and another push. Now, very key thing to note. As they pushed higher, the sellers instantly pushed back and filled 179 lots against the bid. This needs to see continuation. This needs to see sustained interest downside. Because the fact of the matter is, there was a bid that was willing to step in higher. At this price, 179 lots. This is a very key sign of buy-side interest. And if sell-side cannot match that interest and push beyond it, I think this leg up continues. So I'm keeping a close eye now. We're seeing small prints within this range. Let's see what happens. They're still reloading these prices, right? So at some point, you got to just click the button. This trade can easily be invalidated if they poke lower, but for now, we've got to get filled in, right? They're inching up higher. You can see 56 lots. They pull it, but still, they're showing some interest. You watch the pull stack, you watch the bid ask, you can see the market looks like it's willing to step higher and higher. Another thing to note is, if you're being really greedy and careful on your entries, you're not always going to get filled. You want the best possible prices, and using the DOM the right way can get you really good access, provided the market comes back to pick you up. This is how I do things. This is how I trade. A lot of times they'll miss my fills, but it's something I got to live with. That's how I keep risk very minimal. So these very clearly will not get filled. Let's watch the rest of the auction, right? So they're moving up. You can see the volume is building higher. The interest is still holding higher. And they crack through. At this point, I'm not going to chase this, right? As they're moving up through this into the low volume area now, this is essentially the next test. I'm not chasing price up here. I'm not filling down here. What I'm thinking now is, because they're constantly breaking against any sell side, I think that if they do come back into this range, this needs to hold. If they're going to continue, if this trade idea continues to move, they need to hold this range here. What helps is I've got some profits that I can use for ads. So as the market is showing bid side interest, we can see the tape is positive. It's still sustained. The volume is building higher. There's still buying entering the market. We can see it in the order flow on the pull stack. At this point, I'm thinking if they do come back to this range, I think they'll hold it. And if I can get order fills within this range before the next leg up, I do have a distinct advantage. I have a clear edge. And the main reason for this is the fact that I can keep risk to a minimum. I can fill these prices and keep risk just below it. So let's continue the replay. Let's reset the tape. We'll start to layer in the orders. So as you can see, the orders are within this range again. If price were to trade back here and poke through, that's pretty weak. I wouldn't like it as much. So let me go ahead, speed this up to 3x. You can see that they're still auctioning higher, they're building higher. So what's key here is I'm still not going to chase price because it would widen the risk. The advantage changes in a very key way. My risk is increased. At this point, all I'm doing is waiting to see if the market will come back to pick me up. And if they don't, so be it. Your focus when looking to execute and operate within the market always needs to be risk focused. You can never know where the market's going to go. You can never know how it's going to get there. The one thing we can do is mitigate and control our risk. This is a very, very, very key thing to having a sloped equity curve. Let's continue the replay. Eventually they will pick up some of the orders. The orders get picked up. Maybe one gets left. But this is what we're going to do now. We're going to look at the DOM. We're going to watch the pull stack. We're going to watch the bid and the ask. And we're going to find more entries within these inputs. And I'm going to show you how. So as it's moving up, we see buying. There's a clear interest here to buy. So you can place your order there. And now, as it's moving higher, you can see the pull stack really flooding in. It's definitely flooding in at these prices as it comes back to it. Now, this is a bit too high. You can definitely get more if you want here, but for me, a bit too high. So price comes back. And see if we get lucky. We don't. Price goes through. So you want to take off some positions around here. At this point, we already know what happens. Price continues to rally. Every time the sellers come in, they get traded against. Price trades above them. It continues higher. All pullbacks, sell side, they get traded above. Goes to overnight high, goes to the IB extension, goes to the next zone. I had a lot of questions about how the execution was on the live stream. So I figured I'd make a video. Hopefully it's helpful. I think something that's notable was before I got long, I was actually looking for shorts. The second thing was I began filling longs, grabbing access into the market at around the middle of the session's range, something you're probably told to never do. The difference for me is that I had a very tight invalidation point. I had very key order flow that came in that conveyed the information to me that the sell side can no longer be trusted, that the buy side is showing interest that they didn't show before. And if I were to get short, I would get blown out of that short. The only thing left to consider is, would it be possible to make the risk make sense? In my perspective, the buying came in with such urgency that I would have to expect continuation then and there. No weakness, which means price trading back below where the urgent bid came through on the pull stack. And if it were to get back below there, I can easily just take the trade off. On stream, I only had 3 lots filled at the time, and my risk was about 10 points. As price broke upwards and moved back into the range, I filled 5 more. So I was in for 8 total. But at that time, I was able to move the stop up even higher. I was able to do so because of the order flow that was showing on the DOM, where the buyers were willing to reload their positions, at which prices, in which range, and as price pulls back where the sell side stops seeing any reward or any continuation. As the long trade had a very large runway, the risk to reward definitely made sense. Every input I had at the time was showing a very strong bid and an overwhelming bid that the sell side just could not fulfill. Looking at the DOM, we can see the pull stack interaction, where buyers are willing to step up, where sell side stops seeing forward progress as they reload. How aggressive the buyers are while they're hitting the ask, driving price higher and continuing to trade at the ask. The volume building on the footprint bar by bar, higher and higher and higher. The bid side showed an urgency that they didn't before. The sell side, which was being rewarded the entire way down, stopped seeing any reward at all. And as price broke this swing, the market found itself unable to get back below. So then you ask the question again, where might this go? We've had prior day high, IB high for a new high of day. And from there, the overnight high isn't much further away. There's no MGI in between. So I hope this breakdown is helpful. I hope it made sense. This is a trade that I took live on stream on NinjaTrader. Had a lot of questions in the chat. Figured I'd just make a video. And as usual, if you found this helpful, like, comment, subscribe, algorithm stuff. To those of you who are always in the comments, do know that you are appreciated. I see them. There are a lot of them. I'm thankful for that. I've had a lot of requests to make videos showcasing how I execute. The hard part is all of my trading is done live on NinjaTrader's stream using NinjaTrader. So this is the best I can do in terms of trying to showcase real-time execution and how I would do it. I'm a fan of Sierra Chart's replay system. I think it's the best. It's the smoothest. But all of my live executions are on NinjaTrader. So if there is interest in showcasing execution in this way, I'll try to do more for you guys. Obviously, they're not going to be one-to-one identical with what is shown on stream, but at least I can convey the idea, convey my thoughts, how I would execute on them, where I would risk, what gets me in the trade, what I think is good access. And if that's good enough, let me know in the comments. So for now, peace out, YouTube.